Hello, I'm Paul of Paul Beare Ltd. My firm helps overseas companies set up in the UK. We are accountants and legal advisors for either those companies that are looking to set up in the UK or those UK companies that are already operating in the UK that are owned by an overseas party. We can assist with entity formation, bank account creation, payroll registration, value-added tax, employing personnel in the UK, employment contracts, and ongoing compliance covering accounting, tax, VAT, and year-end accounts. Using our colleagues within IR Global, we are able to support our clients that have got UK operations should they choose to expand into France, Germany, Luxembourg, or further afield. We would reach out to the counterpart member there if our client had an issue or were looking to expand into those jurisdictions for localised support. There are certain aspects that we are very good at as a firm, but doing business in that regard comes with its own pitfalls, and I would always refer to the member in that jurisdiction for localised support. A foreign business should set up in the UK perhaps because they've already got clients operating in the UK, or they think there might be a client base for them that exists in the UK. The UK is ideally placed within Europe and on a central time zone to support those clients, whether those clients are operating in the US, Australia, New Zealand, or Asia. In addition to Brexit looming, our certainty is very, very much uncertain as to what will happen with Brexit. We've seen a significant increase in clients setting up in the UK because they want the certainty that they've got a UK company set up prior to Brexit. No one knows when exactly Brexit will happen, but we know it is coming. With the UK legal system being so well regarded around the world, many companies favour the idea of coming to the UK because the UK legal system is replicated among those different jurisdictions worldwide. There are three main types of legal structures for the UK that our clients typically favour. One is a branch, which is an extension of the parent company jurisdiction that's registered at UK Companies House. However, it is governed by overseas parent company law. Then there is a UK limited company, and the UK limited company could either be registered with a subsidiary parent as the shareholder, and that's governed by UK law, or you could have a UK limited company whereby it's owned by 2 or 3 individuals as the shareholders. So the shareholding tree stops with those individuals, wherever those individuals happen to be domiciled. We also have the option of registering as a partnership in the UK or registering as a sole trader. Now, a sole trader is usually for the more simplified UK businesses. It's still possible, but less favoured for overseas company structures. You can also set up a joint venture in the UK, whereby you could have a UK-based company that is part owner of the shares of the UK company, and the parent company, for example, could also own 50% shares of this UK company. And some clients tend to like that operation because they can test the market for the UK first. The banks favour anti-money laundering regulations very, very highly, and they're obviously very well respected from the bank's perspective. We also have to undertake our own due diligence for our clients to ensure that we are compliant with our regulations. With that in mind, at the same time as opening a real bank account, we gather the information when we're instructed to get all the due diligence, shareholders, directors' details up front, so that we've got those when we open the real bank account. If we're instructed, we undertake our due diligence first with the bank's perspectives in mind behind us. We know that opening a UK bank account can take around 2 months from start to finish. In some cases, this may be extended. We open a temporary designated client trust account. That is an account designated in our client's name, usually something like PB Limited Re Client 1, Client 2, for example. That account is there for the clients to utilise, receive income in, and make payments out of. Clients have no direct access to that account themselves. All access is made through us, all payment instructions are made through us, and we make those payment transactions when instructed on our client's behalf. Opening a bank account can take around 2 months at least, because gathering that data information from an anti-money laundering perspective, completion of the forms, all the forms must be completed and wet signed by those signers on the mandate. They can't be digitally signed. Who is going on the mandate? What are the signing powers? Usually I'm appointed to our clients' bank mandates with signing power of up to £15,000, and any 2 signatures are required for amounts over that. Of course, this is client specific. Some clients might prefer a higher threshold. Some clients might prefer a lower threshold. It depends on the volume of transactions that are going to go through the UK account. There are many key points that clients should consider when setting up in the UK. Obviously, it comes down to client objectives and what they're trying to do by setting up a UK operation. For example, there is recent legislation that ensures that every company must provide a workplace pension should the employees wish to join or opt out of that pension. We can also provide support with regard to employment contracts and HR. Employing someone in the UK comes with its own risks because employees are protected by rights. So the employees have rights. The concept of employed at will, whereby if an employee is not performing, you can simply fire them or dismiss them, that does not exist in the UK. There are strict processes that you must go through and apply if an employee is not performing, and you have to performance manage that employee, set targets, goals, and measure to ensure that they are followed if that employee is not performing, with a view to dismissing them at the end of the process. In addition to those points I've just mentioned, value-added tax is also a very complex area. Understanding your duties from being VAT registered, how to collect VAT, when to pay it over, and the different VAT rates that must be applied to certain goods or services based on where the supply of goods or services originates from must be looked at. There are significant financial penalties that could be imposed should the company in question not follow their VAT obligations. For further support regarding your UK operation, please get in touch with the contact details provided on your screen at the moment, and we will be happy to help.